What is up? Holy shit, it's been a while. It's been several months since I made a video. Don't worry, I haven't quit on you. I've just been very busy with a growing business. We welcomed a new baby in our family, and just overall kind of being sick and holidays and stuff. So yeah, we've been busy, but now I'm excited to get back into making more content again. And if you're new here, again, my name is Ryan. I'm a CPA. I have my own CPA firm. I have employees. And the purpose of these videos are to kind of help you guys, the viewers, understand what's going on in the tax world, and for me to kind of give out pointers. As you can see, my voice is kind of jacked up right now. I'm kind of dealing with a recurring, lingering cough. So I'll do my best to get through the video without having a coughing fit, but A for effort, hopefully. So today I'm going to talk about the proposed budget blueprint that the GOP committee has released. This is a big tax cut, spending cut budget proposal, and it's kind of want to go through kind of the main points of this blueprint and also kind of dive just a little deeper into what the tax cuts will be. So here are the main points of this blueprint. First is a $4.5 trillion tax cut. Now that's, to put it in perspective, that this is a big, so I wouldn't hold your breath on getting all these proposals approved, because $4.5 trillion is huge. To give you an idea of the Tax Cuts and Jobs Act passed in 2017, that was a $1.5 trillion tax cut. So $4.5 trillion, pretty big. That's the first thing. Next, we have $1.5 trillion in spending cuts in the federal budget. That's the next thing. That's kind of how they're going to offset the tax cuts, is they're going to cut spending. The next part of this is $2 trillion of mandatory spending cuts. What I perceive this being as, or at least in my opinion, is just like general day-to-day federal operations to cut that spending, things that need to be spent on day-to-day operations in the federal government. This proposal also will seek to increase the debt ceiling by $4 trillion. This will allow the government to continue to finance the debt that they have, the treasury obligations that they have, to kind of help keep things going. And the two last points is obviously to kind of help incentivize or at least benefit working families as one benefit. And then the next thing, the last big thing I want to mention is they're working to reduce wasteful spending and fraud. If you've been paying attention to the news, allegedly Elon Musk is going down in, to some of the departments in the government and basically stripping it to its studs. So we'll see how that goes. All right, let's dive deeper into the tax cuts. So the first big thing here is this proposal wants to extend the expiring tax cuts from the Tax Cuts and Jobs Act that Trump passed in 2017. So what does that all mean? So in 2017, Trump passed a big tax reform. It included a bunch of provisions that were beneficial to a lot of Americans, that were tax cuts, tax incentives, all that. However, to manage the spending and the budget, these provisions were set to expire in 2025. That means after 2025, things will go back to pre-Tax Cuts and Jobs Act. Okay, so that's what the original plan was. This blueprint is set to extend the Tax Cuts and Jobs Act tax cuts indefinitely. So that could be huge. So I'm going to go over some of the main benefits of that, but that's going to be huge because a lot of these could be pretty significant changes for most Americans. All right, so the first big one, the most common one that people will probably take advantage of, is the standard deduction. The Tax Cuts and Jobs Act basically doubled the standard deduction for taxpayers in 2017. So that's a big thing. Like, obviously, if you itemize your deductions already, this might not affect you that much. But for a lot of people who just take the standard deduction, that's kind of a big. Okay. The next thing it did, it doubled the child tax credit. So the child tax credit used to be $1,000, and then after 2017, it became $2,000 per qualifying child. Next, it lowered the tax brackets a little bit, making the highest tax bracket 37% instead of 39.6%. So each of the tax brackets got a slight cut, which again is more favorable to you as Americans. Now, some things that were not super beneficial to a lot of people, and I was thinking, and they probably did this to manage spending, to kind of manage the budgets and not give too many breaks. But one thing that they did do that I did not like was they put a limit on a state and local tax deduction when you itemize your taxes. Usually this is real estate property taxes, your vehicle taxes, state taxes that you paid in your W-2 job. You could take those as an itemized deduction on your tax return. But the Tax Cuts and Jobs Act limited that to just $10,000 per year. So if you have like a larger income or a large property, you hit that limit pretty easily, and you're capped at that limit. So they kind of nerfed that deduction in 2017, which I did not like. The other thing that they nerfed, it's a gaming term, but the other thing that they kind of limited, or at least got rid of, were the miscellaneous 2% deductions on the itemized tax deductions. So these are things like deductions. If you have a W-2 job and let's say you're a salesperson, you're a W-2, and you drive a lot for work, these deductions allow you to take like mileage deductions on your tax return. If you're buying clients meals, lunches and stuff, it allows you to take those deductions on your tax return. Whereas now in 2017, they got rid of that. So if you're a W-2 employee, you can't take those deductions anymore. Now, if you own a business, that's different. I'm just talking about for W-2 employees. The next big thing from the Tax Cuts and Jobs Act is the QBI deduction, the Qualified Business Income Tax Deduction. This is basically a 20% tax deduction that all business owners get, as long as you meet certain criteria, or not all business owners, but small business owners get, as long as you meet certain criteria. In certain industries, this deduction might be limited, but this was a huge tax cut for small business owners. If this gets extended indefinitely or permanently, I'll be a happy person. I own my own business. I'll be super happy about that. But that's the next big thing that will hopefully get permanent extension from this bill, from the Tax Cuts and Jobs Act. This GOP committee, hopefully, they will hope to make this change permanent. They hope to make the Tax Cuts and Jobs Act permanent. So we'll see how that goes. Maybe if they can actually spend or find the spending cuts, then that's a real possibility. The next big thing on this spending proposal is the GOP wants to lower the corporate tax rates. Again, in my opinion, it was already pretty low. It was at a 21% after the Tax Cuts and Jobs Act, down from like 35% before that. Now it's 21%. Now the GOP committee in this bill wants to lower it to 15%. These corporate tax rates, they're for C corporations, which are some of the biggest companies, in the country, the highest revenue, the highest income. Those are C corps. So a 6% tax cut for those companies will be billions of dollars per company, potentially, like lots and lots of money saved. Okay, so yes, they're saving money for the everyday people, the average American, and you guys see the numbers of these, the substantiality of a 6% tax cut on C corps. Next is benefiting working families. So this bill wants to incentivize people to work, to have jobs, to stay employed in their families by expanding credits for childcare, for education, and for healthcare. So they're trying to help, incentivize people to work as long as you work. I'm assuming as long as both spouses work, then you can qualify for these credits in this proposal. So more to come there, but that's kind of what I have for you right now. This bill also, the last two things here from this bill I want to touch on is, one, the GOP wants to eliminate income tax on Social Security benefits. Right now, Social Security benefits are not taxed unless you have other sources of income as well. Then some of it might become taxable. The GOP wants to eliminate taxes completely on Social Security benefits. And the last thing this bill wants to kind of incentivize is car purchases and caregiving expenses for families that have that expense need. So they want to kind of give tax credits for those things to kind of help families out that have that need. All right. So I know this is a pretty high-level explanation of this. I hope to get into more detail soon as we get more information and as things get more solidified. But hopefully this kind of gives you an idea of like what the what the lay of the land is looking like in the GOP's eyes, and maybe we can start getting somewhere with these proposals and passing it through Congress. So, hope you learned something today. If you did, please hit the like button. If you are new here, I would love it if you subscribe to my channel. I will be making more consistent videos from now on. Sorry for the 2-month hiatus, but I would really appreciate a subscribe from you. And that's all I got for today. I'll see you next time.
They act like they know. Guess I gotta hit them with the update. Okay. I've been getting to it when I'm up late. Hit it when you went the front gate. They act like they know. Hold up. Guess I gotta hit them with the update. Really with it, I ain't got a pump fake. Killer flow and hit them with the one take. Act like they know. Guess I gotta hit them with the update. Okay. I've been getting to it.